Welcome to Market Manners. I'm Nadia Hassan together with Jonathan Gunn and Sulhi Azman. And Sulhi is here because he's going to tell us about this little itty-bitty company called FGV, right? And the reason why it actually made the news today was because of this controversial deal it had, Eagle, right? Eagle Plantations. And now they're saying something along the lines of they're not going to pay the high price anymore, which they were criticized over.
I mean, that's actually positive in my perspective for Eagle High, but let's hear what Sulhi has to say.
What are the analysts saying too for today's Brokers Call?
Well, guys, and this FGV is always in the news for the wrong or maybe doubtful reasons. And anyway, analysts are actually quite skeptical. When they first announced the deal, right? Way back then, analysts are saying that they are overpaying for the assets, especially or for the stake really in the PT Eagle High. Now today, we have two brokers call. We have MIDF Research, which has a neutral call with a target price of $1.30. MIDF says, the low CPO price means FGV share price has limited outside factors. But then again, going back to the deal, Bloomberg yesterday quoted sources saying that FGV may actually want to revise certain terms, payment terms of $680 million.
For me, right, I was reading some reports. Apparently, they found something in due D that's, or maybe...
fishy kind of thing?
No, not fishy. I think, this happens. When you actually go through everything and you go through your due diligence, I mean, the rumor is that there is stuff, there's a reason why they're asking for the lower price. But CPO doesn't fill me with confidence at the moment.
Yeah, exactly. With the trend moving forward, it seems to, I think several of the CPO heads have actually come up to say that it's going to be looking for a bearish year.
What about the other analysts? What did they say?
Well, now guys, TA Research has said that FGV's earnings are very sensitive to CPO prices. Every 100 ringgit change in CPO prices per ton will cause or will drag the earnings by 10%, by nearly 10%. So this is a worrying trend. I mean, given the fact that CPO price has slumped, and coupled with the fact that they are actually involved in certain deals which are questionable or maybe
not questionable. I won't call it questionable, but they have
eyebrows.
But they have been looking at their time, trying to field the questions. Have you guys seen their video? Have you seen their FGV video? The one where they defend the deal?
And they defend the deal,
yes, correct. It's interesting. It's an interesting tactic, I have to say.
Well, maybe they want to save their share price and they want to save,
No, they don't even try and influence it. They're trying to maybe make it clearer.
Make it clearer and give their stand on what's happening with these. But then, guys, if you look at the earnings, right, for this stock, right, the stock price, for instance, if you go to the earnings, it has dropped by 33% since last year. And, currently trading at about one ringgit and 22 cents. And this is way below their share price of 4.55 ringgit. Earnings doesn't look very good as well. Revenue went down 6.5%. And in the first half, while the net profit went down by 82%. Would you be buying the stock?
In short, would you try? Is this a good thing?
I think we haven't yet to see whether the stock is going to reach the bottom line.
Good thing,
well,
good thing.
75% of its stock value is gone just like that. I'm looking at this and I'm shaking my head.
Well,
could they be going further down the penny stock, the 1 ringgit mark, like AirAsia?
We'll have to see.